uh, to the Vice Chairperson of the Corporate Laws Committee, C.A. Durgesh Kabra ji, to our very accomplished speaker of the day, Mr. K.T. Sarvanabhava, KTS in short, to the Secretary of the Committee, Sarika Singhal, Seema from the committee and others, and most importantly, the audience, ladies and gentlemen who are in the audience today. Here's a very, very, very hearty good afternoon to all of you, and welcome to this first edition of the Manthan. This is a series from the Corporate Laws Committee, which was conceived by my jointly with my Vice Chairperson, Sri Durgesh Kabra. And this is going to be a series of webinars every week on important aspects of corporate laws and more importantly, of corporate governance. I'll tell you what this series is not intended to be. It's not just intended for the audit fraternity. It's intended to have a much larger reach, wherein the participants of the audience could be either auditors or non-auditors who would like to advise managements on aspects of board oversight as well. So we want to stay true to our nomenclature as the Corporate Governance Committee. We'd like to do a larger agenda beyond just the act to see how we can strengthen the foundation of corporate governance in this wonderful country, India and Bharat, that we inhabit. So what's the beginning without a little story? So why did we call this Manthan? Because Durgesh Bhai and I were very impressed with this Sanskrit word, which means to churn. So I'm going to take the liberty of just narrating the story of the Manthan, the first ever Manthan, which was the Samudra Manthan, more for the benefit of the younger members of this audience today who may not have heard it so much. So Manthan means to shake, to churn, to delve deep into something. And the first Manthan that one heard of was the Samudra Manthan. So there was a sage called Durvasa, and he was called Durvasa because in whom difficulty resides. It was very difficult to live with him. So he met Indra one day and offered him a garland, and Indra used to be the king of the Swargalok, and he still is apparently. So, and Indra gives it to his elephant, and the elephant puts the garland, throws it away. And so Durvasa, true to his name, is very angry. He says, "You will lose all your fortune, Indra." And he was the sage of curses. Curses were like dime a dozen. So much like taxes or the internet of things in those days. So Indra was very worried because the whole universe was starting to become dark and dull and without happiness and without prosperity. So Vishnu gave a suggestion. He said, "Come, let's go discover the goddess of wealth. Where does she live? She lives in this ocean of milk. So let's go and churn." So, and no ideation process is complete without a party and a counterparty. So the ocean was too large for just the gods or the angels or the devas to churn. So they got along the asuras as well. And so there was a mountain called Mandara, which was the pole. And then the rope was a huge snake called Vasuki. And then Vishnu became a tortoise, a giant tortoise on which the pole would rest. And then they began to churn. And in the churning process, a lot of aspects emerged. There was beautiful things. There was the goddess of, abundance, the Kamadhenu, and brilliant jewels that came. And then there also came some poison, which Shiva sort of took in his throat. And hence he's known as the blue-throated one. But the actual message or the moral of the story is to be able to do better. And of course, the goddess of wealth did emerge from this. And so did this nectar of immortality emerge. The moral of the story being that whatever has to happen, there has to be a process of ideation. And this is ever so true of aspects of corporate governance. So why does ICA have a council? Because we need better ideas. We need more churning for better things to emerge. Why is the parliamentary structure filled with so many MLAs, so many MPs, so many ministers? So that is essentially that. And here in this series called Manthan, we're going to go really deep into some aspects that sort of bother us or influence us or which are very important to us as chartered accountants. And welcome to the first of the series, which is Manthan 1 on the most happening thing today, which is on the aspect of audit trails. The Ministry of the Corporate Affairs came up with a very interesting amendment, which was deferred a couple of times. And they said all companies have to maintain an audit trail. Why? Because there must have been a history to it, people going and deleting transactions and losing track of what they did, which is essentially antedating your accounts or making antedated modifications. With that came another very interesting change also, which is maintenance of books of accounts. Even if you keep it in a server outside India or in India, you must have backups here. So we have a very illustrious speaker, KTS. KTS has over 20 years of extensive experience in process and technology risk services, leading control assurance reviews, supporting Sarbanes-Oxley, financial audit, third-party assurance and process management reviews. He works with PwC. He has led projects with large MNCs evaluating their ERP, IT general controls, and process controls. Serviced clients across a very, very wide domain spanning automotive, retail, information technology, and financial services. He is a CISA, a CIA, and most importantly, we thought he was the most appropriate speaker for today. And this is something Durgesh Bhai and I readily concurred on, was the fact that he's one of the key authors of the implementation guide on auditors' responsibility vis-a-vis the audit trail change that has happened in the Companies Act. So here's a very, very hearty welcome to KTS, and may I all request you to do a virtual, put your hands together to welcome KTS. And I'd like to now invite Sri Durgesh Kabra to speak a few words for a couple of minutes and set the context, after which we will move to KTS. Thank you very much to everybody.
Thank you, Shri Priyaji, the chairperson of Corporate Law and Governance Committee. It's indeed a pleasure to be part of this committee as a vice chair this year. And I must tell that the chairperson is a dynamic one and doing a wonderful job. She is in day-to-day connect with the Ministry of Corporate Affairs for resolving the problem of V3, version 3 of the website of the Ministry of Corporate Affairs. And the ministry even has appreciated the work put by her. And let me tell you, friends, that we at the ICAI has involved a team of around 15 people where we are trying to resolve the problems of our members who are facing in this line. You can write to a particular email ID which has been circulated to various, all the members, that if you are facing any problem, please write on that email ID, and there is a number also. On that number you can call, and accordingly we would try to help you out in giving the solution wherever it is possible. And if it is not possible, we are going to escalate the same with the Ministry of Corporate Affairs, and where Sri Priyaji has put a lot of efforts along with Sarikaji and the team. And I must say that that will bring the result. Now the problems which were there at the beginning are not there, and the smooth filing of the forms have started. There are still some problem in some of the forms, and very soon the other lot of forms will also be made live. But before that, the ministry has thought that we will first resolve this, and then we'll come out with the other set of form making live. Now, as far as today's talk is concerned, that is on audit trail, and it's a series of Manthan. Why we have given the name Manthan? The story have been told by Shri Priyaji, and that's the right way. Manthan is also known as churning, stirring, shaking. It's a Sanskrit word, and let me tell you, friends, that the CLCGC is putting best of the efforts to give you the best after doing this churning, stirring of the matters and providing you the best of the faculties where you can update your skill set and can provide better services to the stakeholders. Today, as we know that we are going to discuss with the audit trail and a person, Mr. KTS, who will be dealing with this. As we all know, friends, that the audit trail was supposed to be made applicable from 1st April 2021. This was twice postponed, and now it is becoming applicable from 1st of April 23. And friends, the government is giving a lot of time. The same way it has happened in the case of Caro. But still, the chartered accountant fraternity need to work on this, and we need to be updated. If the government is giving us the time that 2 years later it will be applicable, we should be ready 2 years before, the day when it has been announced that yes, we can work upon. Then we can really be termed as the partner in nation building, and our contributions will be counted in a different way rather than post-mortem. If it is pre-exercise, it is always better, and we can plan our things in a much better way. So I believe that since it was there since last 2 years, the buzz has started and all are aware of this fact. So hopefully this year we would be able to complete our task in a much better way. And as we all know that audit trail is a detailed chronological record where accounting, project details, and other financial data are tracked and traced. And for that, it is advisable to have an audit trail for the same. It would verify and track all kinds of transactions, work process, accounting details, trades in brokerage accounts, and likewise. And friends, that is why it has been thought by the Ministry of Corporate Affairs to make it mandatory. And it is the responsibility of the management that in this software, there has to be a provision where all the transactions in whatever manner can be tracked properly, whatever changes has taken place, whatever authority has taken place, date has taken, change in dates has taken place, change in figures have taken place, all this can be tracked. And who has done it, all these can be tracked. So it will help a better compliance. And that is what needed. It will help the auditors also, that you will have the proper documentation, a reasoning that why this change was made. Today, you don't have reasoning, but tomorrow you would be having the reasoning for the same. So it is always better for all of us when we continuously see this changes which are available in form of the audit trail, and I'm sure that it will help better compliance and better documentation for the chartered accountant. The important thing for all of us is that when it is a responsibility of the management, we must see and we must educate management. We must insist upon the management that they provide all these things into their software. Unless and until it is not there, it would be very difficult for us. Correct. So it is a responsibility of them. We have to make them aware of this, and the software must consist of the audit trail facility, and that will help all of us. With this, we will continue to meet again and again, at least twice in a month, probably every week too. We may plan it out in this Manthan series, where our focus this year will be more on the governance side rather than the regular company law work, because what our chairperson thinks, what our president thinks, that if we chartered accountant give our best in the governance, I think the corporate world will be clean. And when the corporate world will be clean, there will be no one stakeholders who would be raising fingers on us. That is what is important for all of us. And our profession will flourish like anything. With this, thank you, Chairperson, for giving me an opportunity to address all the members, and thanks to all listener members. Wish you all a wonderful learning under this session on the audit trails. Thank you all.
Thank you very, very much, Durgesh Bhai. And it's kind of quite a coincidence. Apparently, I just got a message from the secretary saying we have 1,008 participants in this webinar as we speak. So thank you very much to everybody, and seems like some good number. So Durgesh Bhai is also the chairperson of one of our very key committees in the institute, which is the Committee for Members in Business and Industry, the CMIB committee, and that committee handles the campus placements, and I'm sure he'll do a terrific job. So over to this program, we're going to have a very serious deliberation on audit trails. Now, this audit trail actually of accounting records has a dual impact. One is the impact on management, and the other is the impact on auditors. So today, I think what's very important is, unless your management delivers this properly, you as an auditor don't have a choice on giving a negative report. So I think it's of paramount importance that we need to educate managements in this regard. You may share copies of this webinar, the video links, etc., to the clients you work with. So that's one thing we've been very soft on. We must put the responsibility back to the management to get this done. Knowledge seminar, doing the same program. We'll be very happy to share the KTS's PPT with you. So if any of you want to present your clients, you can go ahead and present. The second thing is, as an auditor, now today, can you help your client to build an audit trail? The answer would be a no, because that will become a management service. So if you're an auditor, please stick to your role, tell them what to do. If they need an advisor to do it for them, please go ahead and let them go ahead. The second part of this webinar will, of course, focus on an auditor's responsibility, for which we have a little more time. We have time till the end of this year, because only when the management implements this year, starting from 1st April 2023, we as auditors are required to report it for the financial statements 23-24. There's also a subtle dichotomy here which happened. This enactment happened a couple of years back. So the Ministry of Corporate Affairs deferred it 3 times. It implemented on a date and deferred it twice for managements. But in the auditor's rule change, it stood as if it was with effect from last year and not from 1st April 23, for which I think the WASB is proposing or has already issued a guidance that we don't have to report on this aspect of audit trail because it is not effective for management as of 1st April 22. So for financial statements of 22-23, we're trying to come out with a standard paragraph where you will not report on it. So it's over to KTS now, and thanks once again for being here. And you may put your questions in the chat box. KTS, of course, had a pre-discussion with us, and he's going to walk us through this very slowly in all its modules and splendor. So look forward to KTS. Thanks, KTS. Over to you.
Thank you so much, Chairperson Sripriya ji, Vice Chairperson Durgesh Kabra ji, Secretary Ms. Sarika, and the team at CLCGC. It has been my privilege and honor to be present here today, especially when I come to know that this is the first series on the Manthan series. So I'm happy to be here and delighted to be in the presence of these August members. I have a short presentation to share. I'll share my presentation and then we'll take it from there. Is my presentation visible now?
Yes,
yes, sir.
Yes, it's visible.
Okay. Thank you. So I'll start with the company's requirements. This is the verbatim rule that got amended. And you can see that it is now applicable from 1st April 2023. And it requires every company which uses an accounting software to maintain its books of account shall use only such software which actually has the future of recording audit trail of each and every transaction, creating an edit log of each change made in books of account, and along with the date when such changes were made, and ensuring that the audit trail cannot be disabled. If you see, we have consciously highlighted a few of the text here. We will break this down and then understand what this really means for companies, how they have to implement, what are the aspects to take care. This is new. This is not just a responsibility of one function, probably from the management, those charged with governance, right from involving the finance, secretarial, legal, compliance teams, along with the IT. It has to work seamlessly to get to a stage where the company is in compliance with the provision of the law. Look at applicability now. Applicability is that it covers every company under the Act that uses accounting software for maintaining its books of account. That's applicable to every company. As you can see, there has been no exemption that has been provided based on any size, turnover, net worth, or nature of the company. So it is applicable to all type of companies that are covered under the Companies Act. And they are required to comply with the rule, irrespective of whether the accounting software is hosted and maintained within the company or on a cloud, whether it is in India, outside India, whether it is actually subscribed as a SaaS model as well. There are some applications which the company may not own, but they are using third-party vendors' application and their data is stored there. So the rule does not make any distinction between software that is being used for maintaining books of account. So whether it is residing within the premises or on a cloud or as a SaaS platform, whether in India or outside India, this rule is applicable. Let's look at some of the definitions that are available in the Act, as well as look at some of the definitions that are not available and how it is interpreted. As you are all mostly aware, books of account is defined under Section 230. So there is a clear definition of what constitutes books of account that is available in the Act. However, the rule per se does not define the term accounting software or audit trail. So a general definition would mean a software or an application that is used to process financial transactions like accounts payable, receivable, inventory, payroll, fixed assets, and journals. Similarly, the rule has used the term audit trail and edit log interchangeably. Term audit trail has not been defined, whereas general understanding of what an audit trail would mean, which is also covered in the implementation guide, is that it would mean a chronological record of the changes that have been made to the data that captures any change to the record, including who made the change, when it was made, and what fields were changed. When we say change to a record, creation will also be included. I will touch upon why that is important a little later. But any change to data, a books of account record, a new invoice gets added, the sale has been made and a new invoice gets added, that is changing the books of account maintained by the company. So that is also considered as a change. So any change to data, including creating new data, updating or deleting data, must be recorded. As I just mentioned, the term has been used interchangeably with edit log. Now, looking at this, since accounting software has not been very clearly outlined in the rule, it is interpreted that accounting software would mean any software or application that's used to maintain the records that constitute or fall under the definition books of account. That is the interpretation of what an accounting software would mean. Moving on. What to log? So this is a very interesting question, and we'll also look at how the rule is worded and how it is interpreted. The rule states that the audit trail should record each and every transaction, creating an edit log of each change made in books of account along with the date when such changes were made. Here, the term transaction is also not defined in the rule. The term transaction to be read with this sentence, and then it's interpreted to say that it would mean the records under the definition of books of account. This is very important because any software may have transactions beyond those that are in books of account as well. For example, let's say a software may treat taking a backup as a transaction, or maybe it may take creating a user record user, you are creating a new user and adding a user to the system, that might be a transaction for the system. But adding a user may not necessarily change your any books of account record. So what is important is to understand that the log has to be enabled for any change that is made in books of account. And also the rule explicitly calls out that date of the such change made has to be captured. But as prudent, it is also important to capture what fields were changed. What was changed is very important. Who changed it, which user ID was used, because it is a software. Normally, a user ID is involved, and when it was when the change actually happened. Now, at times the question may come, when a field is getting changed, should you retain the old value and the new value as well? So this is very interesting question that will come. People working in IT will understand. The solution to that is, if when you create a transaction, if there is a log for it, the first transaction also creates a log, so that has the original old value. When a transaction is subsequently changed, there is an additional audit trail log created to say this transaction has been changed. So let's take an example. There is an invoice to customer A for a value of 1,20,000. So that was the original transaction. So there's an audit trail captured that user X actually created an invoice to customer A with a value of 1,20,000. Subsequently, the next day they realize it's a mistake, it should be 1,30,000. So they are correcting the invoice record. The same user X is correcting, customer name is correct A, whereas the invoice value is updated from 1,20,000 to 1,30,000. So when the audit trail will capture the field value, the invoice value was changed, the revised value is 1,30,000. So how do you know what was the old value? So if you look at that's when we discussed in the previous slide on definition of audit trail, when you create also there is an audit trail. So when you read two audit trails together, you will know the first time the field value for invoice was 1,20,000, and when it was updated, the field value became 1,30,000. So that establishes a trail when the first record was created, who was the customer, what was the amount. The next time when the record was edited, who made the edit, when it was done, what is the date and timestamp. Again, it was the same customer, it was not changed, but the invoice value was changed and it became 1,30,000. So this reading the two trail together, you can understand that what has changed. Some applications have the ability to retain the old value as well. So it again depends upon application to application. If the original record does not have all the details, so when the creation happened first time, the trail was not again explicitly created, then when the trail is created for the time when the record is modified, then old value retention might be possible. And then if you read the rule, verbatim of the rule, it says the accounting software should have the audit trail feature that cannot be disabled. Now, this is a slightly tricky provision because not all accounting software, including very commonly and popularly used ERP systems, as well as off-the-shelf accounting software, they have the ability to keep the audit trail enabled or disabled. There are some options. There are some applications that they say that it is not possible to change it, that has to be thoroughly audited and verified to find out whether that is what they claim that they make is correct or not. But most of the applications have the ability to enable or disable the audit trail. Mostly because it is one of the key IT general controls. It's a sensitive transaction enabling or disabling an audit trail configuration. This is normally restricted to super user or administrators within the application. That is how generally companies operate. Now let us look at a few of the practical challenges that the companies will have. The first and very foremost is understanding what are the records and transactions that will constitute books of account. This is very important. This has been slightly taken for granted. But if you look at today, it is very important because you have to identify and inventorize those records. Only then it is possible for companies to identify in which system this record is actually lying and whether that system and that record has an audit trail enabled. So if some companies already have this, then well and good, but this should be ideally a starting point, which will help them to ensure that the compliance is complete. Now comes, this is very common. What happens to end user computing tools? Somebody, let's say a company is maintaining a fixed asset register in a spreadsheet. What happens in such a case? Is it possible to create an audit trail for any changes that is made? There are some spreadsheet controls that can be enabled to restrict changes to spreadsheets, protect it with access, protect the cells and so on. But still, whether it can create an audit trail, that is a question to understand. So this may also force companies to think, should they move their maintenance of records from tools like a spreadsheet to a more structured software which has records and then that has the ability to enable an audit trail and maintain the audit trail. So that's just another thing that the companies may have to think through. This is another very important issue, may not be applicable for pure play Indian companies, but companies which are part of a global multinational company or a company that's a subsidiary of a global company, and they are using software that is part of their global or a common ERP system. So they are an organization or they are an entity or a company code within a application which is not exclusively for India, but it is a global application. The application is hosted outside India, and the application is common for all the entities. If they, let's say there are instances where a single ERP might have 200 different companies' data hosting it. Then what happens? How do you enable audit trail for only the Indian companies? Or can you enable an audit trail for all the companies in the ERP? Then what happens to the performance, speed, and storage of it? This is another important point. I'm moving on. So that rule talks about changes to books of account. This is slightly a technical matter. When I say technical, when you encounter an error, when you are using an application or a software, generally users will raise a ticket. At times, the IT team with their access will actually fix the error by directly editing the records or updating the records in the database level. So in IT, we call it the front end, which is through application, or back end or direct data changes. Those will also change the books of account, which means if the application has an ability to directly change the data at the database level, then the audit trail has to be enabled for those changes as well. Because the rule does not distinguish between changes made through application or through database. It says changes made to books of account. The last, again, another common scenario that we will encounter is if you are having a SaaS application, software as a service, or any of the services are outsourced to a third party and they are maintaining some of your books of account record, like a payroll, accounts payable, and so on and so forth. What happens to those? How do you enable audit trail in such scenario? Now, if you look at this is very important because this will have an impact on the performance of the system, processing power, speed, and storage. This is natural because you are enabling trail, and this will be having an impact on the system. So this is very important that companies understand this and then plan their IT setup, or upgrade their server, upgrade their applications, make sure that they are in compliance with the law. So normally, as an auditor, when you discuss with the client, you may hear this as one of the concerns for them, but this is the law. They are required to comply. And if that is what is required, and that has to be done. Now, let us also look at a few steps of how companies should go ahead with this compliance. As I mentioned earlier, starting is to identify or revisit the record that part of books of account as per the definition. Identify the software used to create and maintain such records. It might be one or more. Then ensure that such software has an audit trail feature, because one of first condition of the rule is that a company that uses accounting software for maintaining its books of account should have an audit trail feature enabled. And then it should capture every change to the records of books of account. That doesn't mean that you have an audit trail and that's enough. You have to company should make sure that it is capturing the changes to each and every record of books of account. That is an important matter to consider. Then ensure that the audit trail feature is always enabled and not disabled. This is very important because the rule requires that the feature should always be enabled and not disabled. And also ensure the audit trail is enabled at the database level if applicable for logging changes, any direct data changes or backend changes. After all this, it's also very important to protect the audit trail itself, because what is the intent of the law? Intent of the law is to understand what changes are being made, why these are being made, who made it, and when it is made. So that is why an audit trail is required to be created and maintained. It is imperative and important that the audit trail records itself is protected from any unauthorized modification. And last, ensure that the audit trail is retained as per statutory record retention requirements, which currently is at 8 years. So this gives you, just helps companies to understand the type of entries, a table for them to list down or inventorize their books of account records, and then look at what is the application, just example illustrative table here. Look at where is the software hosted, what is the in-house, what is the database, whether application has been, audit trail has been enabled at the application level, whether if it is possible to make direct data changes, then whether audit trail has been enabled at that level also. So this, if you look at the illustration given here, is purposefully given for the same system thrice, because record wise you need to map so that you understand that for each of the books of account record, there is an audit trail that is enabled. Don't just look at application level, because contrary to the perception, even very popular ERPs by default may have certain audit trail features enabled, not necessarily, because the large ERPs are customized and implemented according to the business requirements. So there might be certain tables that may have an audit trail not enabled, in the sense not checked, which means that that table is not actually capturing the audit trail. So it is very important to identify the records, then understand whether the software has enabled audit trail for each of those books of account records. And we have given some more examples. There are multiple systems here, and then just because cost account records also are part of books of account definition, another example. So this is as far as companies is concerned. Now I am moving to understand how it compares with the auditor's reporting requirements. Now this is the verbatim rule that mandates auditors. Our chairperson G covered this. The date, there is a mismatch between what is the date that is required for the companies. It starts from 1st April 23, whereas when the extension was provided last time, unfortunately, the auditor's rule was not amended and it still says as 2022. So here the rule says that if the company has used accounting software for maintaining its books of account, then which has a future of audit trail, whether the company has used accounting software for maintaining its books of account, which has a future of recording audit trail. That's the first point. Second, and whether the same has operated throughout the year for all transactions recorded in the software, and the audit trail feature has not been tampered, and the audit trail has been preserved as per the company's statutory requirements for record retention. So this is the language that is applicable for the rule for where auditors is required to report. Now let us break this down as well. Now you can see here, there are 5 aspects of this thing that the auditor is required to report. The first, whether the company has used such accounting software. It can be one or multiple, which has a feature of recording audit trail. Whether the audit trail feature was tampered during the audit period, whether it operated throughout the year, because this is not explicitly called out in companies' rules, whereas in auditors' rules, it is explicitly called out. Also, whether all transactions recorded in the software are covered in the audit trail feature, and here whether the audit trail feature has been preserved as per record retention requirements. Interestingly, the language that is used in both the company's accounts rules and the company's audit and auditors rules are slightly different. So I thought it would be beneficial for the members to understand the language as well as look at what are the variations and what could be the possible implications. Now here, the language that is used for the account company's rules is that each and every transaction, creating an edit log of each change made in books of account. Whereas in the audit and auditors rules, it uses a term all transactions recorded in the software. The period of operation, it's silent in the company's rules, whereas in the auditor's rules, it has been explicitly called out. The auditor has to say whether the audit trail feature has been operated throughout the year. And here the language for audit trail feature is that it cannot be disabled, whereas when it comes to auditors, the language has been that it's not been tampered with. Interestingly, for a company's rule, the record retention requirement is not specified; it is silent. Whereas when it comes to auditors, it has asked whether the auditors to report whether the audit trail records are retained as per statutory requirements of record retention, which is 8 years. I will take a pause here. Hello.
Yeah.
Sripriya ji, should we take questions now at this stage for audit trail?
You can continue, sir. We'll take questions at one end.
Sure. Okay. Let me continue. I thought we discussed about this backup as well, which is incidentally related to this, but these are two distinct provisions. Some companies and stakeholders mix this up, whereas it is not so. These two are very distinct, but it has a link as well. Let's see what it is, and then quickly look at this. So what is the requirement? What was there earlier? And what has changed with the notification that became effective from 11th August. So MCA issued an amendment to the company's accounts rules. On 5th August, it was made effective from 11th August. There were three things that were changed. On the sub-rule 3.1, the books of account and other relevant books and papers maintained in electronic mode shall remain accessible in India at all times. So this was added, this language was added to say that the primary books of account and relevant books and papers shall be accessible at all times. 3.5, where there was a provision already existing that the backup of the books of account and other books and papers of the company maintained in electronic mode, this is including at a place outside India, if any, shall be kept in servers physically located in India on a daily basis. This was earlier periodical basis. This has been now amended to say that this backup should be taken and maintained in a server in India on a daily basis. The third is more of an administrative provision, in the sense where the service provider is located outside India, the name and address of the person in control of the books of account and other books and papers in India should be filed along with the annual return with the ROC. Now, in audit trail, we looked at what does books of account mean, whereas for backup, it is not restricted to books of account. It is books of account and other books and papers. So the definition is much broader. Section 212 defines what is book and paper. That includes books of account. It's an inclusive definition and talks about deeds, vouchers, writings, documents, minutes, and registers maintained in paper or in electronic form. So when it comes to audit trail, it is clear that the scope is for books of account, whereas for backup, the scope is beyond books of account and it is for books and paper maintained in electronic form that will include books of account, deeds, vouchers, writings, documents, minutes, and registers as well. Listed down a few steps the company can attempt to comply with this provision. Again, starting with revisiting the data that records constitute books of account and other books and papers. If they are maintained in electronic mode, design and implement a mechanism to take daily backup of all such records in a server physically located in India. It is very important that they implement a mechanism to take daily backup of all such records in a server physically located in India. Now, I'll quickly go back to this definition in the rule, not the definition, the rule, what it says about it. It says including at a place in India. If you are maintaining the records of books of account and other books and papers in electronic mode, including at a place outside India, which means even if it is outside India. So which means also that if the primary books of accounts is in India, still you are required to take a backup daily. So irrespective of the place, whether the system, your primary books of account, if it is maintained in electronic mode, whether it is the primary system is in India or outside India, you are required to take a backup and keep the backup in a server physically located in India on a daily basis. And then design and implement a mechanism. This should always be there for accessing the books of account, primary books of account and other books and papers at all times from India. So this is also very important. The third we discussed briefly. This is if the cloud service provider is outside India, then nominate a person residing in India to be the controller of such data and records. The name and address of the person should be filed with the registrar on an annual basis. Now, even this backup thing comes with the requirement, comes with a few challenges. We will look at those. We talked about this in audit trail a little bit as well. If the company is using a global or a common ERP, they have to plan well ahead to make sure that they are in compliance with this law, because the technical feasibility of a daily backup when you have a global or a common ERP is not easy, especially if the data is huge, voluminous, and if the ERP or the software does not have the ability to segregate and separate the Indian entity data, then it will pose a lot of challenges for the companies to comply with. But they have to keep this in mind and then plan how do they get in compliance with this law. There are companies which take the entire backup as well. So they take a backup of the entire system. If some companies have India as their disaster recovery or business continuity center, so they have a full backup here. They are probably had considerations with the data that is outside India, especially if there is any personal data of European region as well. But other companies have concern to have a backup of the entire set of data from the global or common ERP in India, because then they may have to evaluate GDPR considerations and so on, if that rules are applicable, because that data contains data of entities in the Europe region. The second and third can be read together. What is the format of the backup? The backup, or whether the backup itself should be a readily readable system. The rule does not explicitly says that. It says take a daily backup. So it is again subject to interpretation. Some companies have taken a backup of the records in a format and then they have the backup in a server in India. But that is not equivalent to the primary system. In the sense you can view the records, you can read the records, but it is not a working functional system. In the sense only the data is here. It is not backed up by either an application server, or it is not in a format that can be read by the application, but it still can be read by a human. So that is also there. This is, I think, both audit trail and backup being new, in the sense backup of daily data, backup is new. This is something that will evolve and settle down over the course of the period, because most of the companies might have a challenge or more, and then they will work through this challenge, and this will get more clarity, and we will get more understanding of what is the requirement, and this will help the companies to also streamline and come to a common stage of acceptability. The last point is, how do you demonstrate daily backup? Because normally companies take backup, they can take either an incremental backup or a full backup. Some companies will take incremental backup daily, which is nothing but taking additional transactions for the day daily. But at the end of the week or end of the month, they will take a full backup. But backups also get overwritten. We cannot retain the backup of every day for long. So what happens? How do we then demonstrate if tomorrow a regulator comes and asks whether you are in compliance with this law? Then how do they demonstrate that the backup was taken daily, even though they have a backup for the month or the year? Whether did they comply with the law and did they take backup daily? That for that, at least a log should be maintained saying that the backup of the books and paper was taken daily. This is another illustrative tape just for companies to understand how to inventarize or identify records, what would constitute books and paper, and also look at how where they are maintained, what is the name of the system, what is the backup media or server, whether that server is in a physically located in India, and what is the frequency of the backup, whether it is daily or more frequent than daily. With that, that's all I had from a presentation standpoint.
Thanks so much, KTS. I mean, I think that was really clear, and now we're going to actually let the questions flow. Sarika, if there have been any questions, we can take it. Otherwise, I have received some questions. I can start with that.
Ma'am, you start. In the meantime, I'm also sending some questions.
Okay.
I'll paste in chat box.
Okay. Okay. So, KTS, I have a few questions which I've received in advance of this webinar itself. The first question is, you have two segments of data. One is your master data and one is your transaction data. So is audit trail equally applicable for master data and transaction data?
That's a very good question, Chairperson Ji. Actually, that is one common question that comes. Okay, that books of account will include details about your assets, liabilities, receipts, expenditure, income, and expense, purchase and sale of goods and services. For convenience sake, the records are split into master and transaction. You know, instead of entering a vendor address, name, GST number, PAN number, and so on, every time you process an invoice or a customer data, you maintain a master and then do it.
KTS, you may down your presentation so we'll see you in as we speak. Yeah.
Sure. Is it okay? Yeah.
Yes, perfect.
Yeah. So if let's say some configurations may be at master level, right? A vendor may be identified as a MSME or not, or a related party or not. Will that actually have an impact on how you are doing books of account? What about only transaction record? Will it be sufficient enough to say that books of account is maintained? So even though there are views that master record may not necessarily form part of books of account, but I think in the absence of clarification and to be on the safer side, it's better to include master records as part of books of account, because it will actually be integral. You may not be able to read a transaction record which may just have a vendor number or a customer number without a reference to a master record. So that is again subject to interpretation. I understand there are some legal pronouncements as well as what constitute books of account. So we have to look all this together to identify whether that will form part of books of account. The moment it is part of books of account, further than that, there is no other choice. You have to enable audit trail for those.
Sure. So the second thing I'm going to draw your attention to is the definition of books of accounts itself. So you may want to project that particular slide, which I will read out.
Sure.
Section 213 of the Companies Act defines books of accounts. And first of all, the management's responsibility. So these questions are more on the management responsibility now. Creating an edit log of each change made in the books of accounts. Books of accounts under 213 includes records maintained in respect of all sums of money received and expended by a company and matters in relation to which receipts and expenditure takes place. So that possibly answers half your question on whether related party, unrelated party. So the matters there is a very wide kind of word. 2, it says sales and purchases of goods and services by the company, the assets and liabilities of the company, and the items of cost as prescribed under section 148, where it applies to that set of companies to maintain cost records. So if you have a very clear section that uses a very vast term called matters. So in this question, In this context, I have two very pointed questions. What will you define books of accounts as? Is it only what are the books that you report in your tax audit report? So for example, if you're maintaining a fixed asset register in Excel, I would believe that it is an integral books of accounts. Similarly, a company raises a purchase order, and let's say, or a purchase requisition. Now, a purchase order does not become a financial transaction unless there is a GRN which is accounted against it. So it's only an open PO until then. And in the context of an open PO, so let me just stop one by one. So first is, what is your view on fixed asset register? Is it books of accounts?
I would say yes. Probably my personal view is that it is yes, because it is a register that is required to be maintained under the law. So it will, that is why I had also an example of if a fixed asset register is maintained in a spreadsheet, then it will pose challenges to comply with the provision of this audit trail, because spreadsheets do not have that kind of a functionality to maintain an audit trail for each change made in the spreadsheet.
Thanks, Kitias. So in this context, let me take you to the second question. Suppose I have a client who's maintaining fixed asset register in Excel. You clearly mentioned that everybody has to move to a robust accounting software, but let's assume I'm not moving into a robust accounting software for now. What kind of controls would you like to build on spreadsheets? Of course, there are certain established procedures. Even for spreadsheets, you can maintain track changes and controls.
Yes.
So how would one do that?
So a spreadsheet also have controls around protecting the access to the spreadsheet folder, protecting access to the spreadsheet itself, protecting access to the sheets or cells in the spreadsheet as well. Having said that, these are protection to ensure that the data is not unauthorizedly modified or so. But if anybody is an authorized person is modifying it, the system may not create a trail immediately. The system does not, to my knowledge, at least from my experience, it doesn't create a trail. In that sense, it may not be, because the auditor has to report factually whether the system that is used to maintain that record has an audit trail feature. So in that case, it might not be possible for the auditor to get sufficient evidence to say that the software has that functionality of audit trail.
Okay. So now let me lead you to the next question. I have a non-financial record. I mean, a purchase order, until it gets, of course, completed as a GRN, is only non-financial. I don't pass an entry in my tally or in my SAP when I don't pass an accounting entry. So do you think somewhere along the line, these kind of records will also come under the purview of an audit trail?
Currently, I would say no, because if you look at backup, which talks about books and paper, whereas audit trail talks about books of account. And as you rightly mentioned, that purchase order may not necessarily create a financial transaction at that point. So it may not probably be covered under audit trail currently. Tomorrow, the definition gets expanded. We have to wait and see how it operates. But because it doesn't create a financial record which will come under the definition of books of account, my personal view is that a purchase order, the example that we took, may not necessarily become a books of account record which requires an audit trail.
Thanks, Kitias. In fact, I have one small interesting observation here. Sometimes I wondered why they brought in this audit trail as a separate amendment. Of course, it must have been a very critical thing, because anyway, in my 143.3, I'm as an auditor required to say whether, in his opinion, proper books of accounts as required by law have been kept by the company. So, and where do you have this rule on this books of account? It comes in your accounting rules. So I would have presumed that it anyway gets covered, but nevertheless, they have come in with a modification, especially for audit trail, which is why I feel we need to be all the more careful.
Yes.
So,
yes.
so in your view, you feel even fixed asset registers, any calculations that we keep in Excel, we've seen very large companies doing rental processing. Let's say, for example, there's a huge tower company. I mean, I'm not. This is just an anecdotal example. So they have a lot of sites, and then it's all maintained in Excel. All that will also constitute books of accounts.
I mean, to be honest, we have to see that for a specific case like that. But I will give you another example. Let's say there is a retail store that invoices in each of the stores, and they have 300 stores across India. their invoice, sale of services or goods happens at the store. So that is getting recorded in a point of sale system or a system at the store or in a cloud. Then accounting entry flows into the general ledger, which is probably an ERP or so. But since a books of account calls out sales of services or goods is a book of account record, then those invoice systems will also be under the scope of the audit trail provision. Whereas somebody is having an Excel calculation of something that they are doing and then finally arriving at an amount and then recording that in a journal entry, the journal entry will become a books of account record. At this stage, I don't think so. We should extend that to some workings that is maintained in an Excel sheet, whether it can be a provision calculation, it can be anything else, but that is just supporting an accounting entry.
Sure, KTS. In fact, after this, I will request Sarika to read out the questions which have not been covered till now. But there's been a very interesting reference. A lot of companies, 200, 150, 200 employees, keep their payroll in Excel. That necessarily will have to come into an audit trail format, right? Because it's the total of that payroll sheet that I actually take to my books of accounts.
Yeah, correct. So that record itself is an accounting record that they are keeping, right? So that is a transaction that is the nature of your expense. So the intention of the law is not only to enable audit trail for the journal entries. If that was so, I think it would have been very clear to say only journal entries require audit trail, whereas the intent of the law is to cover all records that constitute something like an income or an expense or a receipt or a payment. So in that context, I think that will also be covered.
Sure. Now, may I kindly request Sarika to call out the other questions?
Yes, ma'am.
Yeah.
Ma'am, although you have asked 3-4 questions, but the members have, for the sake of repetition, members have asked a few. Can a small private limited company maintain account manually to avoid audit trails compliance? Or 30-40 entries in the whole year if a company has?
Can it maintain? You may answer. We shouldn't go back to a retrograde manual system only for this reason, but I'll leave it to your view also. I would think not.
I mean, I'm sorry, I'm not in a position to answer that. I mean, it is their call, right? The law is applicable only if you maintain the records in electronic mode. If the company is comfortable to maintain it in manual mode, that is not the intention of the law with the GST and whatever they are integrating there and the Digital India path that we are taking. The intention of the law is not to push companies to go back to manual mode. It is for companies to enhance their governance around how they maintain data, record, and there is some sort of an accountability and traceability for any changes that they make to your accounting records. But I fully understand the member's question. If it is a very small company and then they have very few entries, how would they comply with? And today, the law as it stands, it is applicable to every company. We don't know tomorrow if they think that maybe there is a category of companies that it might be made applicable or there is some clarification that comes in that might help smaller companies. But I completely understand and relate to the question that was asked by the member. Yeah.
Sure. So, I mean, we're broadly of the view, please don't go back to manual because even as an auditor, you're far more comfortable if it's in a computerized environment. Sarika, the next question you may proceed.
Yes, ma'am. Is it necessary to have own licensed version of each company where a person has 5 companies and maintaining in a single licensed software?
Sorry, I'm not fully following the question.
Is it necessary to have own licensed version of each company if a person has 5 companies?
Okay, not necessary. I think I understand what they are coming from. Let's say there is an accounting software that you're using, and that accounting software has the ability to maintain your books of account for 5 different companies. Can I use that, or should I buy 5 instances of that application and then use separately? Not necessary.
Yes, sir.
Even today, so that is not necessary. You can use it, but if they are companies covered under the Companies Act, for each of those 5, they should be in compliance with this audit trail provision.
Yeah. Is spreadsheet part of books of account?
Spreadsheet is the books of account, if the spreadsheet is used to maintain books of account record, then it will become the accounting software that should be considered in scope for the audit trail.
Yeah. Is a fixed asset register maintained in Excel would be required to comply with the requirements of audit trail?
I think we covered this question earlier.
Yeah.
Again, I'm repeating, because this is one of the books of account record. All assets and liabilities you have to maintain, and the fixed asset register is required under the law to be maintained under the Companies Act. That is a record of the assets that you maintain. So possibly the companies would be required, and the auditors would also be interested to have the fixed asset register in a more structured software which has audit trail functionality.
Yes, sir. It is a very specific question. A change in invoice number, which is noticed due to uploading of GST returns by the supplier, constitute a transaction. One. Then the value, account head, or the supplier code name in the ledger has not changed. The field of supply, or we can answer this question separately, sir.
No, I think I understand broadly what they are asking. So I think it's a books of account record, right? So the audit trail is not specific enough to say which fields you have to enable audit trail. So you have normally the softwares also function in a way that most of the time there might be some very specific software that where you have to enable, you can and possibly enable and disable. There are some softwares where at the I'm going slightly technical to answer this question. A record is maintained in a table in a row and column format. We call as fields. For a record, you enable an audit trail. So any change that happens in the record, there is an audit trail enabled. Now, whether each of the fields will constitute a books of account and then enabling that field for audit trail and so on, it is getting too specific and technical, and we have to evaluate from the context and the context of that particular accounting software as well.
In case where a company maintains its books of accounts using software, whether manual maintenance of fixed asset register, say inventory register, employee attendance register, requires any mention or reporting in the report?
The rule talks only about data that is maintained in electronic mode and use of accounting software for maintaining books of accounts record. So if that is not the case, my personal view is that reporting would not be required and it would not be applicable.
Yeah. Next is audit trail is a CARO 2020 requirement or a voluntary compliance by the auditor?
No, audit trail is now separate. Companies audit and auditors rules have been amended. It is a specific requirement under the Companies Act for auditors to report. It is not under CARO. It is a specific Companies Audit and Auditors Rules Amendment that requires you to report under this clause.
It is mandatory.
Yes, it is mandatory.
Yeah. How the auditor would know that at any time during the year, audit trail has not been disabled and again enabled?
Very good question. Not very easy. Only for a financial person to check this. This is where one key important thing for auditors is to also develop the technology skills or involve experts as necessary, who are IT specialists or so, who can understand the configuration, who can understand by reviewing logs, looking at tables, records, configurations to say whether the log or the audit trail feature was enabled and operated throughout the year. Some software have the ability to capture whether that if somebody enables, disables, that also gets logged. So that can be viewed also. So that again depends upon accounting software and depends upon the technical aspect of it and how somebody is able to go and review those.
Whether bank transactions of today be entered tomorrow, and if so, in which date? Again, it's a very...
So usually it happens. I mean, normally an accounting software would have at least 2 dates it might have. There are applications which has 3 dates also. So when do I actually enter? So it's like your bank statement, right? A date of transaction plus a value date is there. So you might be able to enter a transaction on, let's say you are closing the books of 31st January, but still the 31st January books is open and you are still entering in the first 2-3 days of February. You may be still able to enter a transaction with 31st January date. The document date or posting date, the terminologies will differ depending on applications. One of the date is the entry date. When did you actually enter? When did you enter? So in this example, you entered on 2nd February. whereas the actual entry was effected as of 31st January. So that might be the posting date or document date. I mean, I'm just giving you some examples of field names. It can be differently called in different accounting software. One is entry date, another is the posting date from which date it is effective.
Yeah. Does invoice software also form part of books of accounts?
Does invoice software? Yes, because it is a books of account record that is recording your sale of goods or services.
Yeah. If office is closed for 10 days, how to report for not taking daily backup by the company?
That is an interesting question. This has to evolve. I mean, again, it can be even Saturday, Sunday, right? Saturday, Sunday, if some companies do not work, are they still required to take backup? So that is something that we have to evolve. Some companies have automated a daily backup. Especially large companies have this habit of automating this backup thing that happens daily, irrespective of the week of the day. It can happen on a Saturday or a Sunday. But there are companies which probably do not work 7 days. They work only 6 days. What happened in that case? I think that is something practically will evolve. Right now, honestly, I do not have an answer. Personal view is that if there are no transactions and it is the same data, then it may not require it. But how do you know that there are no transactions? If the software is accessible even from outside the company, right? Most of the employees today have remote access. They work on weekends to pass transactions. There are transactions that are getting recorded. So in that case, if they have remote access and they are processing transactions, there might be transactions that are getting affected in the books of account record as well as books and paper. So it might still require a daily backup. But if it is closed, no transactions are there, and there is nobody to initiate a backup, let's say it's a manual human process to drive it, then it might be a different case. We have to see how this evolves.
Yeah. Whether requirement of daily backup is only for the companies maintaining server outside India, or for each and every Indian company having data server in India only?
So if you look at the definition, it says if you are maintaining books of account and books and paper and other records in electronic mode, including in a place outside India. So it says including. It doesn't say only for companies that is maintaining its primary record outside India. It says including. So it's an inclusive term that is mentioned there, and I would presume it is applicable for the companies that maintain their primary books of account in India as well. It will be applicable for all companies covered under the Act.
What would be the impact and good practice for year-end entries usually done during audit time? Example, provision, depreciation, etc.
Yeah, so you record it during, let's say, April or May when the audit is happening, or in June, depending upon the nature of the company. Then still the system is already capturing the 2 dates. You are effecting the transaction with the posting date or effective date being the 31st March, whereas the entry date or the document date is actually the date on which the entry is entered. That is probably in April or May or June. So that will get captured in the trail. So tomorrow, if somebody wants to review the audit log, they will know what were the entries that were passed on before 31st, on 31st, what were the entries that were subsequently passed. Even today, without even audit trail, that can be found out. It's not a different scenario. That is not going to change anything now from an audit trail perspective.
Yeah. What does implementation of audit trail require any change in accounting policies?
Accounting policy, I'm not so sure.
No.
My personal view is that I don't think so. But it will impact some of the IT policies, configurations, access, and so on. Definitely IT policies. Accounting policies, I would leave to the experts here to respond to. But in my personal view, accounting policy may not have an impact.
Yeah. What about smaller companies which do not have regular accounts person? What could be impact?
There is no exemption currently available in the rule. It is applicable. So a regular person, okay, he is not available. Let's say once in a month, somebody comes for 3 days and enters all the transactions. That is fine. That is only the timing of the entry, right? So still till date, the rule or the law doesn't talk about timing of entry, even though we presume that entries have to be recorded concurrently, which is best practice from a governance standpoint. Let's say it's a very small company, they do not have a full-time accountant, and there are people who come once in a month for 3 days and record the transactions. Still, again, we mentioned in another question, response to another question, the entry date will be those 3 days for all the transactions that has happened in the last month. So both dates will get captured, and audit trail will also capture the data. Timing of recording of any entry or transaction may not have a direct impact on the audit trail necessarily. It will capture the date.
Yeah. How to ensure audit trail retention, since after audit data will remain with the company only and could be subject to change, especially where data is continuous on YOY basis, year-on-year basis?
Yes, that is a good question. This is now a very new requirement for the auditors to report on audit trail retention as per statutory record retention requirements. From a preservation of audit trail, the implementation guidance also has given some guidance to the auditors, stating that you can perform on a test basis, even for the past years, whether those records are maintained. And when we looked at the company's responsibilities, we also highlighted and the issue that they have to, the control that they have to maintain on any modification to the audit trail. They should ensure that there is no modification to the audit trail. So that is also mentioned there. So I think that will take care of it.
Yeah. For the year 20 to 23, we are passing entries up to 31 or 31st August 23. Will this be captured in audit trail?
For 22-23, transactions are processed till 31st August 23. Whether it will be captured, it might get captured. Yeah, if the audit trail is already enabled, it might get captured. Or if the company is configuring its software to capture audit trail only from 1st April 23, if the effective date or the posting date is 1st April 23, then it may not capture it. So it again depends on how the feature is enabled. If it is enabled at a transaction level, irrespective of the date and year, it might be capturing even the entries today, which is getting recorded for 31st March.
Then is there any standard format to report audit trails as an auditor?
Yes, the implementation guide has given some illustrative examples of how the auditor can report on audit trail. There are some examples that has been given in the implementation guide.
Is it applicable for LLP?
I don't think so. I mean, take the expert opinion of Sri Priyaji. My understanding is it is not.
Is it mandatory to maintain books of accounts on daily basis? What if I prepare books of account at the end of financial year, as company does not have huge transactions?
Yeah, I think we discussed this about the timing of maintenance of books of accounts. Some people may have a practice of recording transactions 3 days in a month for the past month. So it is again practice. From a governance standpoint, it may make sense to record it timely, but again, it depends upon the size, nature, and complexity of the company. There is no one size fit all answer for this.
Yeah. Then again,
it's okay, Sarika. I think the questions are kind of getting repetitive.
Yes, ma'am.
Kajis, you can down the PowerPoint and.
Sure.
So thank you very much. I think there aren't any more questions. But if I were to just conclude and you can sort of add in. So I think we just go back to the basics. We need to understand what's books of accounts, what's books in paper. Make sure you're very, very conservative in your interpretation of books of accounts because it speaks of assets, liabilities, income, expenditure, and cost records. So if I was an auditor, I'd be ultra cautious. And if I was a management also, I would be ultra cautious. So I would kind of let it take the best possible interpretation. And it's always nice to err on the side of caution. You need to understand what is an audit trail. You need to ensure that an audit trail can't be, you need to actually audit the audit trail itself.
Yes.
And in fact, I was discussing with KTS this morning whether you will need to perform, tests such as reperformance. Should I go in and try one transaction and amend the transaction and see if it's coming? So it's not that the client tells you I have an audit trail and then you take it on board and run along. Please do some reperformance testing to ensure that the audit trail is actually working. And in larger companies, I think this is something that's important. The ITGC controls have to get sort of evaluated. So, and again, as a typical practicing chartered accountant, you may or may not be able to have that capability. If you don't have that capability, you can always engage an expert, and the standards allow you to do it. And that's about it. And I think welcome to this new regime when everything looks very different. 23, 24 will be a very, very different year. And KTS also had mentioned one line where he says this seems to be administrative. So if you looked at that maintenance of books, that particular rule, which spoke about maintenance of data in where whether it's in India or abroad, if your accounting system, regardless of whether it's in India or abroad, you need to have a backup in India, and you need to be having visibility of accounts of India in India on a daily basis. There was one more line where he says you need to identify a person.
Yes.
I think that's pretty serious, because I think today where the government is also coming from is, look, we just don't want to make rules of law. We need to be able to enforce rules of law. So if that doesn't happen, then they've clearly identified an officer in default there. So that's about it. And another thing is, this whole thing was anyway, in my view, it's just a matter of added emphasis that they have put it out in a separate accounts rule and a separate audit rule. I would believe that this was always already embedded in your ICOFR. It's just that we didn't really take it out and put it as a line, which now the government wants us to do separately. So with this conclusion, leave KTS to present his concluding remarks and we can conclude.
No, as I said, I learned this from one of my teachers 20 years ago. With any new provision that gets introduced, the first change is the resistance, right? Resistance, what is this, how it is difficult, and so on. He was presenting on a topic in one of the seminars like this, and then he told, first we need to embrace change. If the law is coming, there is a reason for it. There is an intention behind that. Yes, we may not have clarity on day one on how this is going to operate, but we will figure out a way. We will figure out the way. The fraternity, the client companies, as well as the accounting profession, the regulators will figure out a way, and this will settle down in the due course of time. But we should not suddenly dismiss, the rule of law. So I would just echo the same sentiment that my guru told me those days. This is an evolving area. It involves legal, secretarial, compliance, finance, and IT to work together, overseen by my senior management and those charged with governance. And this will evolve. This will definitely evolve. And there are many questions from some of our members who asked about small companies and so on. We will wait and see how this evolves, the situation evolves and see. But let's take this as a path that has been laid out by the ministry, and then from an auditor standpoint, let's, like what Sripriyaji mentioned, let's go with the positive mindset, test, obtain sufficient and appropriate evidence, and report factually of how the company is maintaining it, and that should safeguard the interests of auditors as well.
Thanks, and of course that's just one more priceless thing. I think it's very important that the client is the client and the auditor is the auditor. Very often we tend to get into the shoes of the client and feel very sorry for them. It's up to them to represent if they have a problem. There are industry bodies, there are the CIIs and the SOPMs. If people genuinely feel there has to be a relaxation for a certain category of companies, then it's industry that must actually wake up and request for it. So as an auditor, I think we need to be slightly clinical. We need to say this is the rule. Whether you like it or not, it's a rule for both of us, so we need to comply.
Absolutely.
So with these words, yeah.
Thank you so much for having me. It was again a privilege and honor to be part of this session and to address this August audience. Thank you, Chairperson Sripriyaji, Vice Chairperson Durgesh Kabraji, Ms. Sarika and team from the committee. Thank you so much. I really enjoyed and hope I did some justice to answering some of the questions that came up.
Plenty, KTS. Thank you very much. And if Durgesh Bhai has something to say? Otherwise, we can wind up.
I think we can wind up, ma'am.
Sure. 1 minute.
Yeah.
Seems to be. Yeah. He's very much on the call. So, yeah. So, great. So, thank you, KTS. Thank you very much.
Thank you so much. Thank you.
Thank you, sir. Thank you, ma'am.
Yes, Mr. Durgesh is here.
Thank you. Thank you all.
Thank you, sir. Thanks.